Hey, welcome to the Closing Beat, everybody. Happy Thursday. How you doing out there? Congrats, Vanessa, actually. Pretty big day for the markets, at least as far as the change in the Guess the Dow. So that is your leaderboard, as you guys saw there. We are financial advisors here at Jazz Wealth. That's just a fun game that we play. jazzwealth.com/guess the Dow. No strings attached. We won't ask you for anything. We won't even spam you. Right? Yeah, no, we won't even spam you. So you're welcome to just play. If you win, it's a $100 gift card. And if you're a client, you can have your account credited, $100, whatever you like. You know, so just a fun way to play a game over the summer. We will be back live. We are currently addressing all of those weird little issues that we've been having. And but in the meantime, if you have questions and you want to ask, Cody at jazzwealth.com. Good luck, Cody. So we can address the questions on the show, but if you do have some questions and you've been missing me, then that's all cool too, but we will be back to do this live. Let's take a look at the stock markets here. Should we get started? Here's the S&P up on your screen and walking away with itself, right? Just a consistent, we'll call it the Fed follow-up rally, because there was no other reason today for the markets to broadly be rallying higher. Just a general sentiment of, well, the Fed is close to the end of raising rates. Well, we may have skipped this one, but you know what? Maybe there's one or two more. We can handle that. There's definitely not going to be any cuts. And so the market responding in a way that the Fed probably doesn't want. They would like sort of stale asset prices. I think they even use that word, stale. But really no other reason for the markets to move in higher here today. And I might want to point out the participation rate in the market. So in other words, was it just a couple stocks that lifted the market, or did broadly everything kind of go with the market today? Well, it's very much broad participation. So here's each individual sector, materials, and yeah, I mean, you can see it. And so as you look across the board, anything that was lower today mostly was just individual stock news. For the most part, you saw broad index level buying. Now, I will say that large caps still dominated as far as being the biggest or outperformers of the market here today. Small caps obviously did well. Everything was fine. But you're seeing cyclical stocks, defensive stocks, all work together in this most recent rally. And by most recent, I mean right there, right? Just this 4-day window, just kind of all working together there. Now, tech was the leader. I'll use the XLK to give you a little look at that. You can see obviously how extended and how overbought it is in the short term there. This today, this would be the fourth gain of over 1% in the last 6 days. That's impressive, right? That's a pretty much runaway rally there, at least in the short term. Now, there's some traps coming up in the market. We're going to address those sector by sector here in just a minute, but you got to be careful. Ask yourself, do you want to get emotional and say, oh man, the market's never gonna fall again? Like never just have a bad couple of weeks or even just a bad couple of days? You know that's not true. Right? So before you let that FOMO get the best of you and you pay the worst of prices, just take a look around. Let's make sure we don't fall for some of those traps. Speaking of large cap, there we go. If we go over to the NASDAQ, I want to point this out. So the NASDAQ is up about 40%, right? Yeah, close enough. Up 40%, just over 40%. Year to date, by the way, well, it's been, call it 6 months. Is that normal for the NASDAQ to gain that much even just in a given year, let alone 6 months? Well, this red dot indicates we are here, right? This is where we're at the moment. And nothing reports because it's not a full year, right? So this is each year's returns, right? The difference in returns for each year. The biggest one solid year gain that I've just shown on this chart here, 65%. The lowest is 41%. So we can have that range. This is not necessarily odd for the NASDAQ to have that kind of range, but in a whole year, right? So we're at 40% now, which means this would be, if it stayed here, this would be the fourth largest gain in the NASDAQ. 6 months into the year. Now, I'm not saying we can't close the year out up 40%, but we've got 6 months to go. So in 6 months, could we not just have a series of pullbacks, right? Every analyst besides Goldman Sachs Goldman Sachs says there's a 25% chance of a recession. Every other analyst says recession by the end of the year. Now, we know recession doesn't necessarily mean lower stock prices, but it tends to have an initial impact on stocks. So when you look at the NASDAQ and you say, oh my gosh, I got to just get in. Number one, you have a parabolic rally in the short term. Number two, it is the most overbought index of all of them. Number three, you go over to the year's participation and say, this isn't necessarily odd, but this is a little bit outside the ideal purchase price area. Now, if you're dollar cost averaging, of course, I understand that. There's no sense in stopping that because you can rebalance, right? You can do those things, which we're going to have a class on rebalancing because I think a lot of people misunderstand what that means. So we'll do a video on that one. But nonetheless, you look at the NASDAQ and say, nope, I'm not going to be the one that buys the NASDAQ more than 2 standard deviations away from its average. And I'll use the 20-day average in this case. So very extended in the short term. No need. If you missed it, or if you're only participating in your 401k, or you have some large cap stocks or whatever, wouldn't you think that this is about the time where everybody's just so greedy and excited, thinking tech's never going to pull back? They want to buy. They are tripping over themselves to buy the NASDAQ. If you don't give them some shares to buy, they're going to stop buying, right? So maybe it's time to, take just a little bit of profit there. I'm just throwing things out. I can't tell you what to do. The S&P is now up 15% year to date. It's been 6 months. Again, the S&P's average 6-month return is 5.62%. We're up 15. So that is above average. That is odd, right? That doesn't mean we can't have a 15% year, but it means with 6 months to go in the rest of the year, wouldn't you expect some profit taking? Wouldn't you expect some kind of bad news out there? Maybe it's political because that's, we're getting into that season. Maybe it's something else. I don't know, right? Maybe it's just pure profit taking on large cap stocks, which causes tech to fall, which causes the markets to fall. So start thinking ahead about what the game plan is rather than say, I'm going to sit and wait, right? Especially for you short-term, mid-term type traders out there. You got to be making some decisions. And like I said, every freaking analyst besides Goldman Sachs says there's a recession coming this year, right? And they all say it'll happen by the end of the year. That's where we stand. Did all that just go away? The banking stock issues there, the fact that we spend a whole tons and crap load of money here in the United States, the fact that the Fed's tightening rates and people are slowing down, the fact that people are now pretty much working from home a little bit more, and so there's less commercial properties being rented out there, the fact that people are slowly starting to not sell their house and just stay where they're at, that's going to slow things down. Remember, that's 10% of the whole GDP right there. So when you look at that kind of thing, is it gone? No, it still exists. It's still out there. But right now, the mood is, AI, tech. Oh, wow, look at the market go. I better not miss that. This is it. That was the bottom. See you later. Right? It's so easy to get wrapped up in that. I just want you to be careful there, right? Nonetheless, if you look around the market, even the really beaten down stocks got bought up today. Look at some names like odd names that you wouldn't normally look at. Genesco. Double-digit fundamental growth here in terms of earnings. So not a bad company fundamentally, just out of favor. I mean, beaten down thanks to their forward kind of outlook there on life. But they came and bought that today. Why? It's just discounted, right? It's a strong company that has good earnings. They obviously have a profit. Everything's fine. So people said, fine, I'll do that. Do you guys have a joint by you, the joint chiropractor? You know what that is, Cody? The joint chiropractic clinic?
Yeah.
You ever see that? That's a public company. We have recently owned the stock. That's a public company. They have 700 locations. They got their whole sales pitch figured out. You go in there and they're like, we'll crack you up good. See you 3 times a week. Come back, get yourself a little cracker.
That sounds nice. It sounds nice though.
Well, it's a good time. I'm one of those that I'm like, just gonna watch a YouTube video and then you go, there it is. You pop it.
That's good.
Good stuff. Anyways. Why would that stock be higher today? Do they have like thousands of locations? They have a huge profit margin because there's just people there snapping you to death. But other than that, why would that stock be up? Number one, people went for the discounts today. Number two, broad index buying. When money floods into the index, remember, it has to go to those individual stocks, or that's the old school way there. And Consol Energy. Now, to be fair, energy itself had a good rally today. Remember, that one wasn't participating. I shared that with you yesterday. Today was more broad-based. But again, out of nowhere, there's no real news on this stock. They're not buying back shares. They didn't have earnings that just killed it or something. It's just broad-based rallying. So if you notice those sort of dogs of your portfolio just starting to wake up there a little bit, no problem. All of those companies I just mentioned, double-digit earnings growth, obviously they have a profit, just little companies going and doing their thing. People said, you know what, I even want that today. That's what I want to do. All right, let's do something a little different. We haven't done this in a while. Where are the traps in the market right now? I just mentioned one. We talked about tech, okay? So when you look at the tech sector, it is what would be considered extremely overbought. From a technical perspective, you would say more than 2 standard deviations away from the 20-day average price. It's even extended from its 50-day average price. And you know, I don't use that as like a voodoo magic kind of a thing, but I say that because in anything else in life, if you went home to your spouse and you say, I bought this thing, I don't know, a little electric, scooter to ride around the neighborhood, right? I bought this thing. If you first of all, your wife would probably be like, you freaking kid, grow up a little bit. But if you bought one and you said, oh, and here's the good news, honey, I paid way more than the average price that I saw online for the last 20 or 50 days, right? You wouldn't do that. There's no way you would do that. So why would you do that in the tech sector? There's no need to do that. Now, if you're looking around the tech sector, some of the most overbought stocks in the tech sector, this is earnings related and sort of follow up to that. Oracle, not one that normally people get excited about. We look at the semiconductor, NXPI, second most overbought stock in the tech sector, followed by Autodesk. So in other words, these stocks are more overbought than they like to be. Doesn't mean this can't be the case where they go a little further. It just means that's odd. If you're participating, maybe you take some action there. Maybe you don't need so much exposure to it. I don't know, what to tell you there. Okay, other areas. Consumer discretionary, right? Extremely overbought. It's tough to say. Imagine you're managing your family's money or something. How are you going to convincingly say, I bought it right now? Today, it was a great day to buy. How do you justify that? Very difficult. And now, imagine, by the way, side topic, if I'm saying that, I'm here all day, every day, watching this. This is just what we do. If I'm saying that, how many other investors are going, that's a little rich for my blood? What happens when the market gets to that point? Doesn't mean it has to fall. It could just stop, right? And people go, let me hold back a little bit. I've got some money. I do want to invest it. I'll catch you next week. Let's see what happens, right? More and more and more people start thinking that, and that's what makes that sort of overbought condition breathe, right? Come back and relax a little bit. All right, anyways, consumer discretionary, if you're looking around there, you got to go Carnival. Carnival, the most overbought stock in consumer discretionary. When you're getting a premium for these cruises, I've been looking. I've had friends tell me they're going on cruises. Royal Caribbean was the other one. He cruised for him and his wife and his 2 kids. He was looking at $7,000, $7,000 to float on a boat for a while that has food nonstop. I don't know. Granted, he was getting the drink pass. He said he couldn't go without the drink pass, so I don't judge. Industrials. We talked about this before. Industrials waking up, kind of sneaking along there. Basic materials, not the most exciting area, but it was waking up, and you got to pay attention if you're one of those that likes to hunt for different, plays, sectors, stocks, whatever. That one's also kind of a trap. Extremely overbought right now. Notice what we're doing. There's 3 sectors already that I've kind of talked about. Okay, what if those 3 sectors are telling you, and there's actually 4. What was the other one? 3 financials. Oh, and communication services, so 5. So imagine if all of those sectors, they're like, people don't want to pay a premium. That's where we're at in the market right now. Now, it's a tough spot because you're going, I missed it. Yeah, I missed it. Or you wish you had more money in the market or whatever. I don't know. Coulda, shoulda, woulda. But now we're at that point where you get tricked or trapped into putting money to work. And inevitably, you go, leave it to me. When I put a bunch of money in there, I pick the top of the market. Don't have that feeling. Just stop it. Just sit on your hands, right? Anyways, so what do we have? Is there anything interesting areas that you can look at? Consumer staples. have yet to become extended. And you could probably understand why. Like, who wants to participate in this so much when the world is all excited about the other areas? Well, that money from the tech sector, right, has to go somewhere. There's no reason for people to sell and leave the market, right? You've already done that. You got your municipal bond money, you've got your high interest savings money. You've already left. You spent the first 6 months leaving the market. Nobody's leaving, but there will be profit taking. And you can kind of see, because this sector should not be very interesting right now, you can kind of see money coming in. Yeah, it's going up. That's one thing. But look at the bottom. Can you see more volume by day? Huh. Okay, let's see something here. Okay, that's interesting, right? Look, more volume by day. Oh, okay. Go back over here. That's interesting. Let's try a different one. Let's go utilities. Why on earth would that be interesting? It's waking up. Money's got to go somewhere. So that money that made the growth profit, maybe some of that goes towards a little slow, stable, like dividend type money, right? As people get to that, I'm a little concerned about this market. So I know I rambled off a little bit there, but just pointing out these different areas because I can tell, I just know, I can feel you guys out there going, I missed it. Should have been in the market. It's never going to come back again. I don't know what I'm going to do. Come on, right? Said it? Cody, look, he's already crying. He's doing it too. Okay, let's do it. Just a couple stocks in the news here today. AutoZone, obviously it was higher today with the broad market, but a little bit of an outperformer, quite a bit actually. They're buying back $2 billion worth of stock. Hello. Delta Airlines, this goes into one from the previous sectors we were talking about. Overextended, overbought. I get it. It's so cool. Yay, look at this, going up so fast. It's never going to stop. Yes, it will. Yeah, it has every time in the past. This time is no different. Nonetheless, they're paying a 10-cent quarterly dividend. Isn't that cute? Good for them. Jabil Circuit. Sneaky, stealthy little rally. Have you been looking at this stock? These guys put all the chips and all the widgets onto the boards. They're based here in St. Pete, actually, so we see them all the time. Well done with their earnings there. I like to follow them just because it's kind of like local company and, you know, I don't know. You see the CEO around town and stuff every now and then. It's kind of fun. I'm the like dorky, geeky guy that's like, hey, man, dude, you going to buy them Skittles? Hey, can I ask you a question? Anyways, $8.4 billion in sales, $233 million in profit. Well done. Well done. And Palo Alto Networks, you already know if you've been watching, is taking the place of Dish Networks in the S&P starting June 20th. Which will be next week. Friendly reminder, well, first of all, happy Father's Day. Those of you on Sunday, hope you get a chance to do nothing or go fishing or do whatever it is you want to do. Enjoy that. And maybe someone brings you some snacks or something. I don't know. But on Monday, the stock market is closed for Juneteenth and just not open. So, yeah, we won't be here either. Nothing to report to you. It'll be a 3-day weekend. And so you guys hopefully will enjoy your 3-day weekend. If you're a father, make the most of it, man. See if you can spill that Father's Day into Monday and just see how it goes. You know what I mean? It's not going to go well. All right, enjoy the rest of your day and evening. We will see you later if you're one of our clients for Wine and Wealth tonight. So, adios.